The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, on the Zacks Rank Buy radar this time around for growth and income, we have a couple of REITs that we think you should know about. And Nina Mishra, who's the editor of Zacks Income Investor, is here to tell you about them. First of all, though, REITs have been kind of popular lately because of the low interest rate environment, right? And the dividend situation.
Right, because they pay out such juicy dividends of 6, 7 or more than that. It is because they are required to distribute at least 90% of their taxable income to shareholders in the form of dividends. So in this ultra low interest rate environment, they look very attractive, and they have nice growth potential too, particularly the two which we are talking about today. And I expect REITs to continue to do well because I expect rates to stay lower for longer.
Yeah, I mean, what I'm reading indicates just that one cut.
Yes.
The one boost in Fed rates by the Fed this year.
Exactly.
Nobody's looking for anything more.
Exactly. So they may not raise rates, particularly because of the presidential election this year.
Yeah.
Even if the economic data of late has been better than expected, despite better economic data, they may not raise rates because of this political uncertainty. And investors should also remember that in case they raise rates, the pace will be very slow. It may be just one rate hike this year and then one and done. So REITs are okay with slow rise in interest rates if the economy continues to improve, because in that case, rising rents and occupancy are able to offset the impact of slightly higher interest rates. So I expect REITs to do well, and investors should take a look at them.
Okay. Well, we'll take any help we can get at this point as far as investing, right? So the first REIT you want to talk about is the Omega Healthcare Investors REIT.
Yes, the ticker is OHI, and it is the largest publicly traded REIT dedicated to skilled nursing facilities.
Okay.
Their current portfolio holds about 90% skilled nursing facilities and about 10% assistant living facilities. And population is getting older, so the need for nursing facilities continues to rise. They have an excellent dividend payment record as well. Earlier this month, they raised their dividend again. It was their 16th consecutive quarterly dividend rise, and their current dividend yield exceeds 6.5%, it's about 6.7%. In fact, through 2015, they are the #1 healthcare REIT in terms of total shareholder returns for the past 10 years. So that's really good. Looking at their detailed estimates page, you see that Zacks consensus estimates expect sales revenue growth of exceeding 17% this year and exceeding 5% next year.
Okay.
They are a Zacks rank 2 stock with a growth style score of B.
Okay. And then there's APLE Hospitality REIT, APLE, the ticker, right?
Yes. So they are one of the best and best capitalized and largest lodging REITs in the US. They hold a portfolio of high quality select service hotels across Hilton and Marriott brands. These hotels are mainly located in urban and high-end suburban areas. Their current portfolio consists of about 180 hotels with about 23,000 rooms. So if you look at their detailed estimates, Zacks consensus estimates show an earnings growth of about 12% this year and about 7% next year, and revenue growth exceeding 7% this year and about 4% next year. Their balance sheet is quite strong, so they should be able to continue to grow through acquisitions, and they also are a Zacks rank 2 stock with a growth style score of B.
Okay. You know, it used to be that when people invested for income, they invested in utility stocks.
Yes.
Right? But now have REITs become the vehicle of choice lately?
REITs, utilities typically have a much lower growth potential, and they are more impacted in the rising rate scenario. So investors piles into utilities when the rates were so low, and utilities have in fact become really expensive in terms of valuation now. So, and they're looking at their growth potential, I don't think they're so attractive. REITs offer a higher dividend payout, as well as a better growth potential in my view, and they will be less hurt if there is slow and steady rate hike if the economy continues to improve.
All right, do you own either one of these?
I own the first one, Omega, the ticker OHI, in my income investor portfolio.
All right, well, you can check out more information on REITs and stocks in general on our website, Zacks.com. So if you're not there already watching this video, get on over and you can link to it all right off the homepage. With Nina, I'm Terry Ruffalo.